In 2025, I've invested over $10,000 in just a few individual assets. And I'm going to be going through and telling you exactly why and where my money's gone. We're going to be talking about Amazon, Google, and a global ETF that I've been investing in. So to quickly preface this video, I have around $102,000 invested in the stock market, and that's between my $56,500 in my stake portfolio and then the $46,900 in my Vanguard portfolio, and I'll be going through both. My investment philosophy is long-term over short. I plan to keep a long-term outlook as a young investor with many decades ahead of me of my investment horizon. I'm focused on growth and diversification. I'm not a dividend investor, but as you can see, I do get dividends, and all my dividends are reinvested back in. But my aim is to invest in compounding, growing, dominant companies. I dollar cost average, so I've been putting money in every single week, pretty much every single month for the past few years, and that's what's allowed me to grow my portfolios and break the $100,000 mark. And why I'm not timing the market. My overall goal is, just like I said, to continuously invest over time, and long term, I believe I'll be able to generate alpha. The first stock I wanted to go through is Amazon stock. Amazon is one of my original holdings that I had many years back and sold, and I've recently been growing my position again. As you can see, Amazon's up 11% in the last week, but it's still down in the last month, with massive news around the tariffs having really thrown the stock around. If we have a look at the last 6 months, you can see the stock is also down and was previously trading at highs of around $240 a share. I have around $6,100 in equity, or basically 33 shares. Currently, I'm down because I've been buying in, and I bought right before the market dipped. But why invest in Amazon in 2025? The reason I've been investing in Amazon is because the price has come down. That's one of them. It's trading at a lower PE ratio than it has historically, especially recently, and I believe there's lots of upside in this company. Starting with one of its bigger parts is its retail side. Again, you look globally in its distribution, many parts of the world are all serviced by Amazon, with people buying and delivering packages. AWS is another big factor, their cloud and infrastructure business that Amazon has, and their logistic dominance. In terms of a personal investment, I think they'll be primed to integrate AI into their everyday business, whether that's from their distribution or with their AWS side of the business. And if we have a look now, whilst the stock was trading in the 200s and the 240s, like I said, my average share price is now under $200 a share, which is good for me. Overall, I think Amazon will perform, beating the market in the long term, hopefully, and that's one of the reasons why I've allocated a small portion of my portfolio, around 7%, towards Amazon stock, and I still have exposure to it in my broader market tracking ETFs. My long-term thesis with Amazon is that I believe if there is a market downturn, that won't affect Amazon as much. I believe they'll actually be able to gain market share, as they have such a strong integral business with such a loyal customer base, and they can weather the storm a lot better than what other companies can, as they are a lot more established. The next company I wanted to go through was Google, or commonly known as the stock with Alphabet. Google is another share that's had a very volatile past few months. Overall, the stock is down 4.26% in the last month, and it's down in the last 6 months just like Amazon, and was trading at highs of around $205 a share. Overall, it's trading now in the 150s, and my average share price is in 164. So I am down around 4.5% on my investment in Alphabet. But why Google? Google's a company like Amazon that I held previously, sold out of, but I've been buying back in as the share price has fallen. It's trading at around a 19 PE ratio and even got down to the 18s when the stock fell into the $145 range per share. Overall, Google has a lot going for it. It has things such as AI with their Gemini tool, as people talk about, YouTube, Google Cloud, its dominance in search, and then they have other bets such as Waymo, which many people don't realize. Overall, Google seems to be heading in the right direction. I've done more in-depth videos on these companies, but it's heading everything it was beating in its earnings. Over these past few years, it's very rare that these big companies do miss on their earnings. And overall, I think Google's been discounted a lot more compared to many of its big tech peers. Trading at a sub 20 PE ratio, in my opinion, is a great time for me to invest and suits my long-term investment horizon. Yes, there are lots of fears about Alphabet going forward and what will happen with Google's search market dominance. But I believe they have a lot of smart people there, and they'll be able to weather the storm and come out on the right side. People are still using search to do things such as buying plane tickets and making major decisions. Yes, you might still use the AI chatbots at the moment for helping with day-to-day tasks, and I think these will evolve, and Google is in a good position to do that with Gemini, but I think search should still be a major factor in Google's dominance. Overall, like I said, I've got a long-term horizon on Google, and when you look at the last 5 years, the stock is up 145%, which is massive. It's beating the market, and that's great returns for investors. And if we have a look from the drop here, all the way from the 205, like I said, all the way down to the price now, we've pretty much corrected back to, you could go as far as April 24 prices. And I think the business is continuously growing and is going to be doing the right things. There are some fears at the moment with the DOJ around potentially getting split up. There's some things about monopolies, but I think Google should be able to weather this storm. And when investors make money is looking long term and buying when others are fearful. So for myself, I think Google is the right decision to invest in right now. The next position is actually an ETF. So in my Vanguard portfolio, you'll see the bottom, I have an ETF called VGS, or Vanguard's Index International Shares ETF, which is trading at around $129 a share at the moment. I have 271 shares and around $35,000 invested in this ETF, making it my biggest position across both portfolios. And what this ETF offers is a broad global tracking ETF holding at around 1,500 companies from across the world. If we have a look, the last year's return has been 12%, which is quite strong. It has a lower management fee, and it does distribute quarterly dividend payments, which, like I said, I'm not a dividend investor, but I do reinvest all my dividends right back into my portfolio so I can get that snowball effect. Why VGS? You might have seen in my stake portfolio, I do hold another Vanguard ETF called VOO, which tracks the S&P 500. If I could invest in VOO in my Vanguard portfolio, I probably would, but I can't as it doesn't allow me, and VGS does give me extra diversification. So I'm not just overly exposed into the US market. I do have other holdings as well. So it's been quite good for me so far. And if we have a look at the price chart over the last 5 years, it's traded up all the way down from $76 a share to where it is sitting at now. And if we have a look at the last year, like I said, it's been very good as well. And even with this market pullback, I'm using this as a time to buy in. The ETF was trading as high as $144 per share and is now traded down. Overall, there are global worries about what these tariffs will do to stocks, but I try to keep a long-term outlook, and I think VGS will allow me to invest in a long-standing ETF, which hopefully won't be as affected by these changes in the market. And like you can see here, it says it invests in around 23 different companies, including US, Japan, UK, Canada, France, and Switzerland. And one thing I did notice when I did invest in my Vanguard portfolio was there wasn't as much volatility as there was in my stake portfolio, with more individual holdings and more heavily weighted towards the US, which is good for me. Overall, I think these three holdings, these one ETF and these two individual stocks, do give me a bit of balance between growth and diversification, and I continue to track these videos, doing weekly updates, showing you guys where I'm investing my money and what's been happening in the market with full transparency, which you can track. Keep in mind, this isn't financial advice, and these are just three positions that I personally have liked. So please do your own research and look at what you're investing in. But this is what I'm deciding on, and feel free to share your comments of what you think of these holdings, or any of these other holdings that I do as well, and any other places you think you'll be able to generate alpha compared to the rest of the market. But that is all from me today. Thank you.